Welcome to the Crypto Chillist. I hope that you subscribe, and if you appreciate the content, that you like the content as well. None of this is financial advice. I am not a financial advisor. Please do your own research. What I hope to do here is introduce a trading strategy that is straightforward and simple, hype-free, and free. There is no reason why you should pay other people for questionable advice. So let's get to it. Here's a screenshot of my TradingView account. I'm a premium member, but you don't need to have a premium account in TradingView to get the same results as this. I provided a link in the description for you to create a TradingView account. Now, I took a screenshot of Bitcoin price activity from October 2020 until about April 2022. And the Bitcoin price is in blue. So this is a daily view of Bitcoin and the closing price for each day charted out in blue. And overlaying the Bitcoin price, I have created exponential moving averages. So there's essentially trading indicators that you can get for free in TradingView, and one of them is this multiple EMA trading indicator. Now, I'm using exponential moving average. So just briefly from Investopedia, a moving average is an average over time, and an exponential moving average places a greater weight or importance on the current price activity. And that's really all we care about. We don't care about the past or the future. We care about now, right? And when we create a trading strategy that focuses on now, we can make clear and crisp decisions rather than listening to FUD or listening to promises. We can take advantage of the information we have in front of us and make decisions right now. This EMA indicator is based on the 8-hour closing price. And the way I have this set up is this EMA does not change regardless of what my view is. So if I want to view Bitcoin in a 2-hour chart, I can still see the current price in reference to the EMA 8-hour closing price, if that makes sense. So the EMA lines don't change, but I can look at Bitcoin price in more detail. And every week I'll be releasing a video and we'll kind of demonstrate this in real time. But this is a summary video, so let's get on with the show. So 110 EMA I'm using to indicate bullish price activity or positive price activity. So every time the price is above the 110 EMA, this is positive. And every time the price is below the 110, we need to be guarded. And when the price is below the 200 moving average, we're in a bearish price activity. Now, that's all fine and well. This is a fairly complicated chart, but what do you do? How do you use this? What do you do in the times that I've circled? What decisions are you supposed to make, right? So moving from left to right, every time the price is above the 110 EMA, you possibly could time the market well and pick your tops and get out at the very top, but it's very unlikely. In that very moment, every time seems like the top, every time seems like the bottom. It's really hard to know, so that's why you use these indicators and you stick to the indicators. So as price is going up, you take profit every time the price falls below the 110 EMA because you don't know what will happen. There may be another war and everybody might get wrecked, but at least you've taken your profit. So take profit every time the price falls below 110 EMA. You can take that profit, set it aside, pay off credit cards, buy something special, show your friends and family that you can make money from the market. So moving left to right, we're taking profit every time the price falls below 110 EMA. Now, when the price falls below 110 EMA, this is when we need to be guarded. We need to be on our toes, and we need to think about protecting our investment. So when the price falls below the 220, that's when we pull 15% out. But our remaining investment stays in. So if the market goes back up again, which it did in this case, then we can still benefit from that rebound. So price falls below 220, we take 15% out. Price rises above 220, we put 15% back in. We ride it back up above the 110, and when we hit the 110 again, going down, we take our profit. In this case, we had the China miner situation, and so Bitcoin price crashed, essentially. So as the price is going down, we're protecting our investment. It goes below the 220, we took 15% out. The 330, the 440, we took an additional 35% out each time, and we had about 15% left of our original investment that we took all out when we fell below the 200-day EMA. Now we stay out of the market. We don't get faked out like a lot of people got faked out. We stay out of the market until we rise again above the 110 EMA. This will be our early entry, and we don't want to risk everything. I'm presenting a risk averse or a fairly conservative strategy here. You can do whatever you want, but this is an early entry. We don't know exactly what's going to happen. For all we know, the price is going to bounce off of that 200-day EMA as resistance. We don't know. But in this case, we rise above the 110 EMA. We have 15% in. And then as the price continues to go up, we go back into the market the same way that we came out. We 15% and 35% and 35% until we're above the moving averages here. Price goes up for a while until late September and falls or touches the 110 EMA, and we take profit again. We've made quite a bit of money here. So we've gone from about 32,000 to about 47,000, and that's a decent profit. And you can take that, again, pay off your debts, put it into a stable coin or whatever you want to do with that. Price falls below the other moving averages. Again, we pull out the same rate. And when the price goes above the moving averages, we go back into the market. Now, this second time, we never fell below the 200-day EMA, so we weren't ever completely out. So we did benefit when the price rebounded. We were once again above the 110 EMA, around 45,000, and we ended up taking our profit at 60,000 when the Bitcoin price fell below 110 EMA. Again, that was probably for everybody the best time to get out in late November 2021. And as the price fell down and down and down, we were pulling out our investments as we were going down, and then we were all out once the price fell below the 200-day EMA. Again, there was another fake out. We ignored it, and we waited to get back in until April 2022, when Bitcoin price rose above the 110 EMA, but again, that was a 15% re-entry.